Hi, it's Mike from Order Flows, and welcome to the Crypto Order Flow Trading course. This is Module 5, talking about order flow delta in the crypto markets. All right, so what is order flow delta? Delta in order flow is the net difference between aggressive buyers and aggressive sellers in a bar. Right? Delta reveals to a trader who is in control of that bar. Now, as the market rises, generally it does so on positive delta because buyers are in control. As the market declines, it generally does so with bars posting negative delta. Sellers are in control. Now, when I say generally, okay, that doesn't mean it has to be, right? It doesn't mean that as the market's rising, you're seeing green bars with positive delta. Sometimes there's going to be green bars with negative delta, just as in a market decline, you could have red bars, down candles with positive delta. So on a footprint chart, on the order flow footprint chart, how does it look? Well, it will appear on the bottom. It'll say delta, right? I mean, it's pretty clear. You don't have to do any calculations. The computer does all the calculations for you. And again, delta is either going to be positive, negative, or zero. If it's positive, that means buyers were in control of that bar. If it's negative, sellers were in control. If it's zero, it's just a coincidence that it landed on zero. Don't try to read too much into it like, oh my gosh, delta ended up as zero. That must mean something. No, it's just, a lot of us, we look at time-based charts. The bar just finishes right at that particular time. It's just a coincidence. More than anything else. All right, so positive, negative, or zero. Usually, in crypto, you very rarely get a delta, a final delta, the headline number delta, as being zero. Now, what makes delta so important is because while a market rises with positive delta flow, some green candles may exhibit negative delta, just as when a market falls, usually it exhibits mostly negative delta, but occasionally there are some bars with positive delta. When this happens, it is a sign of absorption, and absorption is an important concept in understanding the market, right? You want to know where buyers are or where sellers are to absorb all the volume that's coming into the market to stop a move from happening. Right? If a market is trading down, 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 and then it just seems to stop, why does it stop? Because usually there's somebody absorbing all the selling. There's a big buyer down there. Just as if a market is rallying, 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 then it just sort of stops. Often it's because there's supply, there's sellers up there, right, to absorb all the buying that's going on. So signs of absorption, right? You're going to see red bars that sometimes have positive delta, right? Here's a red candle, right? So this market is trading down, 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 right? Negative delta, negative delta, negative delta, negative delta. But all of a sudden now we've got positive delta, okay? Okay, sorry, I had to drink something. So market's moving down, 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 negative delta, sellers are in control. Now it's telling you buyers are in control, right? Positive delta 33. It's a nice strong delta, right? Previous bar had negative 31. Previous bar before that, minus 10, minus 1, minus 22. Now there's supply coming into the market, okay? You can see the volumes here, 11 Bitcoin, 9, 22, 10, 17. So people are offering it out, but it's attracting at these lower prices buyers, right? Even though people are coming in offering it out, you have buyers coming in lifting those offers, right? It's just enough to absorb all the selling that's going on. Now, usually what you're going to see is the opposite would sort of be like this green candle with heavy bid side here. But I know I can just look here. I can see, well, there's 22 Bitcoin, there's 10, there's 17 that traded, right? Look at these previous bars. You see 14 here. You don't really see a whole heck of a lot coming in, right? In terms of quantities of Bitcoin transacting, but it hits this low level. Now it's subtracting buyers coming in. They are there absorbing all that selling that's going on. Market starts to tick higher. You get this red candle, negative delta, minus 8.44, right? But it's a green candle, right? Normally you're going to expect to see positive delta, right? Just like you see here, positive delta of 17. it's negative delta of -8 because you have another sign of absorption coming in right here, 7 Bitcoin traded here. Somebody is bidding here, right? Now, this is where it gets interesting. This is why I love order flow, right? So I can see the market, right? There was some supply here. Person bought it, they turned it bid. They traded 7 Bitcoin here, right? They traded another, there's still a solid bid here for more Bitcoin. 7, that's already 14. So it's like 25 Bitcoin being traded right here. Someone bought that offer, bid it over, bid it at the next level, right? So you got another 5 here, another 4 here. So I know at this level, 38,350, there was active buyers here. That's a sign of absorption, right? Because it's coming in after the market sold off. Now, how you can use delta to determine market direction is, remember, delta is market generated information, and as such is going to tell you what traders are doing right now in the market. So just as you would look at price increasing or decreasing, you can also look at the delta for clues as to who is buying or selling and who's getting stronger in the market. Are buyers getting stronger or are sellers getting stronger? This is information that you want to see and use and take advantage of. And this is especially important as the market moves sideways, right? Trends do occur after periods of consolidation, right? We love to catch trends, but where do trends come from? Well, oftentimes trends come out of sideways consolidation activity where traders are uncertain. They're waiting for more news to happen. And delta can reveal to you when traders are starting to get more aggressive one way or the other, either bullish or bearish in their aggression. Usually traders like to wait for a breakout to happen, but with order flow delta, you can see the signs appearing prior to the breakout, right? Sooner you get into a breakout, the more potential you're going to have for profit. Okay, so market direction, okay, more or less going sideways, and you see delta getting strong. -11, -9, -28, right? Here it's just kind of small, +1.1, +4.5, -1.59, all of a sudden jumps 10 times greater, -11, -9. Market is it's made up its mind on the direction of this trade. You're starting to see these imbalances come in as well. Obviously, point of control is migrating lower, but the first clue is in the delta, how it's jumping. So delta also shows market strength or market weakness. And most people, they don't really think about trends ending. They saw the trend has ended. But when you look at the order flow, you can actually see it ending in real time. Trends end when traders aren't interested in buying or selling aggressively anymore. Right? If you're only looking at price, every traded price looks the same, right? Again, I explained that earlier. If you're just looking at price, you don't know if $100 worth of Bitcoin traded or $10 million worth of Bitcoin traded. You just see, well, it traded that price because you're looking at traded price. Well, it traded this price, traded that price. Again, you don't know the intensity behind the volume that traded. But if you look at order flow and specifically delta, you can see when a move is getting weaker or even when it's getting stronger. Essentially, you can now see, even though price is moving higher, the aggressive buying is getting less and less, right? And imagine, if the aggressive buying is getting less and less, what do you think is going to happen, right? The move is going to end soon, just as it moves down. Once the aggressive selling dries up and there are no more sellers, the downward pressure on the market is removed, and the market can now start to climb, right? It doesn't have much to get through in the sense of you've already removed that selling pressure, right? You've taken the pressure off the market. Now the market's free to do what it wants to do, right? And oftentimes that means reverse that move that just happened. So again, the market strength, right? You see off the low here, 37,450, delta of 9, delta of 14. Then you got a small -11 delta, small move down 3, and then again 7, 17, 0.7, and then 30, right? You can see the strength coming in here, even though it looks like we're just sort of going sideways here from this first bar at 37,450 to this bar at 37 700, 650, 700. What do you see? Well, I got I got 5 bars, or is this 6 bars rather? Positive 9, positive 14, positive 3, positive 7, positive 17. It's growing. 3, 7, 17. Then it pauses a little bit here, granted, 0.7. And then it jumps quite big, right? Then you got that big move, $300 move in the 1 bar, okay? So the signs were here in the delta. It looks like it was just sort of going sideways, but you can see, even though it's drifting down a little bit, right? 1, 2, 3 bars, minus 11, but then 3 plus 7, right? It's going down, but the aggressive buying is coming into the market. And then it moves back up, plus 17. Delta doubles here. Delta doubles here, right? So the aggressive buyers are getting stronger between this bar and this bar. Aggressive buyers are getting stronger between this bar and this bar. And then the market is primed for a pop up, right? So you're not looking at a potential short. Instead, you can easily look at a very simple long trade right here. Okay, now here's on the downside, market weakness. Okay, positive delta of 1.2, then minus 4, minus 8, minus 18. It's gone from minus 4 to minus 8. It's doubled. Right, minus 8 to minus 18. It's doubled. And there's still more to this move. The next 2 bars, it drops 500 bucks. Right, then it starts going sideways again. But the signs were there in the delta that the market was weak. It's showing you that there's aggressive selling coming in, right? The market is just more or less going sideways, and then the delta just gets strong in a direction. Minus 4, minus 8, minus 18. Doubles, doubles, doubles. Aggressive sellers doubled. Aggressive sellers doubled. And it had a nice move down. Now, climactic delta bars. Okay, now this is it's a market nuance, and it's usually a sign of the end of a move or sideways activity is about to come. Now, oftentimes with climactic bars, it's not necessarily a case of that bar being the exact high or low of the move. Sometimes there's a little spillover into the next bar, especially if you're using time-based charts, because if you're using a 1 minute chart, after 60 seconds, the bar ends, period, right? And then it forms a new bar. So there is sometimes a little bit of follow through before the high or low is made. But a climactic bar is, FOMO. Everyone's rushing in or rushing out, trying to get in or out all at the same time, because of whatever news or whatever FUD that's hitting the market. Now, there's a way you can use this to your advantage, right? If you're in a position and you see that climactic bar come in, that's usually a sign, the market is going to go sideways, at least at a minimum. And we might still keep going, but generally it's going to go sideways. And that is evident in the delta. Okay, so while a market can keep going higher, oftentimes it's just going to stall and go sideways. So you're long, you get that climactic delta bar, 375, right? It's almost 10 times, any of your previous deltas. And then what happens? Market more or less just goes sideways, right? It did pop up here, make a new high a little bit by, what is that? A couple $100, and again, it tests that high, but it's more or less just going sideways. Don't get too excited. You see a bar like that, it's easy to get excited. You want to get excited, think, oh my gosh, everyone's coming in, you're clapping your hands, rubbing them together, oh, this is it, to the moon. But what happens is it often just goes sideways on you. That's just the nature of how it works. Okay, another example, and again, when you're dealing with delta, you're looking at the delta numbers. You're not looking at the volume inside here. You can break it down, but usually the climactic delta bars are so big they're off your chart. I had to scrunch it in here to fit it, but all I'm talking, since this is on delta, what I'm focused on is the headline number here, the delta, 296. Previous bar was 1. Bar before that was also -1. 547 Bitcoin traded versus 77 versus earlier 53. So it's 8 to 10 times more volume coming in. That's massive. And what happens? Next bar opens up, make that new high, and then more or less go sideways, start drifting back down. Again, if you're in a position, you see one of those big climactic bars, the bar where it jumps 5%, especially, this is a 5-minute chart. That's some time to reconsider your position. Just you know what, I got my pop. Take it, get out, wait for your next trade. Right? It's a great risk way to manage your risk on a trade. Now here the market is sort of going down, 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 but it's 72 minus 8 minus 100. Okay, so would I consider minus 100 a climactic delta bar? If this bar was at minus 72, I would. Usually climactic bars are going to have a very wide range, like you see here, from 41,800 to almost 44,000, 43,800. Just like here, 39,800 up to 40,600. So you're getting big ranges. This bar here, even though it's got a big negative delta of minus 100, it's not 39,000 to 38,650. And it's very similar here, 39,300 to 39,000. Okay, and delta's not that far off. Volume is pretty average. 187. Previous bar is 136. Previous bar is 151. Here you're getting 547 versus 77. 973 Bitcoin traded versus 189. It's an imbalance in the volume as well, as opposed to just it's more, but 187 versus 136 is not an imbalance. It's a little bit larger than recent history, but it's still within the realm. It's possible to get that. Now again, talking about absorption, what do you have here, right? You got this bar, negative delta, green candle. Why is it negative delta? You got a green candle. Shouldn't it be positive delta? Well, as the market came down into this low, it's trading 4 Bitcoin, 3 Bitcoin, 31 Bitcoin. So there was passive buyers here absorbing all that selling that was going on down here. Okay, this is a clear sign of absorption as well. So I would not characterize this as a climactic delta bar, this bar or this bar, just because these are, within the realms, even though they look big. Now you're comparing 100 to 72, right, which isn't that big. And the range of the bar, it's not covering much distance, right? Remember, volatility is basically the market looking for volume to trade, right? That's why you get wide-ranging bars like you see here, right? The volatility in this bar is big because there's a lot of traders coming into the market looking to transact. Here you got, sort of above average volume, but not necessarily out of the realm of possibility. So these are not climactic bars, but I want you to see the difference, right? Because you're taking things and you're putting it in context of the market. Big range, average ranges. So it's nothing special in these bars. So that concludes module 5. Now let's move on to the next module.